Hello, everyone. This is Martin. It is Sunday evening. The charts are actually live, and I normally like to produce the weekly videos prior to 5 p.m. opening on a Sunday, but I've had a busy weekend, and actually, I wasn't even too sure if I was going to produce this video. I'm actually producing this video with a heavy heart. My father passed away recently, and the actual funeral and burial was just yesterday, so I'm just getting over all of that. I mean, I love you guys. I'm really dedicated to trading Forex, and I really badly want to produce this video for you. So I'm going to try to get through it. This video is dedicated to my father. His name is Michael. And if you're willing to watch the video right to the end, I've posted a picture of my father, and you can take a look at that if you'd like. Okay, so let's get started, and we're going to get right to the first currency pair. Okay, we've got the Euro USD daily. You can see that right here. And last week, this is last week's trading right here. I mentioned that we're looking for an uptrend continuation to continue as long as price went above the 110.60. So that was the confirmation. The 110.60 is let me just take a look. Okay, 110.60 right there. Okay, so if price it continues to rise higher above this upper gray rectangle and closes above that, we can definitely say that price is going to continue going higher. So it hasn't done that to this point in time, and so we're going to keep our eyes on that. Also mentioned about a false triangle breakout. Okay, and again, last week price did break out above the upper trend line. You can see that with this big, huge bullish candle. However, and this is where the false breakouts sometimes happen. If price continues then reversing, and it did the next day and the next day, excuse me, and all the way back down here, then that might have been a false breakout, but indeed, next couple of days toward the end of the latter part of last week, price did finally break out with this bullish candle right here. So I expect price to keep going a little bit higher. And for this week, we're looking at a price to continue going sideways or higher. My suggestion is to buy limit orders on pullback, which means waiting for price to come back down. And you can see price is starting to come back down right now. We are trading live. It is 9:40 in the evening, and we're just showing you that this is live trading here. It is usually I like to produce these videos prior to 5 p.m. opening on a Sunday, but I'm doing this live, and I'm going to actually show you a couple of things. I did some gap trading already since the open, and I'm going to talk to you about that new strategy. But in this case here, we're looking at the daily chart. Price is coming down a bit, so my suggestion is waiting for price to come down a wee bit further, maybe halfway of the previous bullish candle, or down closer to the 21 moving average. Okay. Again, if price goes higher, now we want to watch for the different resistance areas. In this case, we've got the 100 SMA with this dashed line. We've got this gray rectangle, which is a major resistance area. We've got a brand new trend line coming down. You can see the pink line right here. That is a long-term trend line going way back to August of this year, or of last year, I should say, August of last year. And so price could come back up to any of these areas or somewhere around here. You can see that with my cursor. This is an area of confluence, and what if price goes up higher, it may bounce right back down. So really, you could look for a counter trend trading opportunity. If price actually closes, as I mentioned, above the gray rectangle area, price then most likely will go higher to retest the previous high here. Okay, so that's what I see for the Euro USD. Now we're switching to the British Pound USD, and that's totally different. completely opposite from the Euro USD. Normally, they do trend in similar fashion. If the euro is going up, the British pound would be going up. But the British pound has really been going down, falling like a heavy stone, and it just keeps going down, but you've noticed that once price broke here the 2015 low, which is 1.4565 here, that was the previous 2015 low. It's actually hit a new 2009 low right here, and it looks like price is going to be bouncing off of that, pulling back, and this is exactly what we want to be looking for. So price hits this area, which is a major support area. We're expecting price to bounce higher. And how high? Well, take a look at the previous candle. You can estimate 30 to 50% of its total range. So that would be right about there, and you can place a sell limit order right about there, okay? Or just waiting for price to meet up with this falling trend line. This is the 8 EMA. So 8 EMA be coming down further. Price may be going up higher, and that's another area you can place a sell limit order, or just waiting for price to reverse again to the downside, looking for one bearish candle, and also trading the breakout just below here, below the 2009 low. So many different ways to get into the trade. What you really want to do is look for confirmation, some type of confirmation, okay? So for this week, um, what I'm looking for overall, we're in a bearish sentiment, but only consider taking sell trades after pullbacks. Okay, MACD is well below zero here. So let's go on to the next pair, the Australian USD right here. Now I'm going to go back to the Australian USD daily chart. Okay, and this is an interesting pair because this is a great example of a gap down today after 5 p.m. Price started much lower, opened up much lower than the close of the previous Friday. Here's the previous Friday right here. Here's the open for today's candle. And to show you what I mean, I'm going to switch now to a 5-minute chart. Okay, so here's a 5-minute chart. Here's the close of last Friday right there. This is where price open, okay, and this is called a gap down. And here's the strategy. When you see this huge space in between the open to the previous close, what you want to do is you want to anticipate the closing or the filling of that space. So in this case, we want to take a buy trade, and normally you want to wait at least 5 minutes. Right here, this is where you would have entered a trade, and if you would have done that, you would have closed the gap of 15 pips right as soon as price got to right there. 15 pips is great, depending on what your lot size is and how much your how much money that you're putting on per lot. So in this case, not only did it close the gap, but price went from here all the way up to here. That's 57 pips, that's quite the pullback. You could have made huge amount of money just today, and then put your computer away for the rest of the week. Okay, so this is called the trading the gap strategy. There only one small little caution: every time you place a trade, you have to check the spread. Okay, and before you place the trade, and let me just do that. Right click on the chart, trading, click on new order. Okay, so here's the spread. Right now it's 689, 6897, 6 no, so 95, 97. It's about 2 pips. So it's pretty normal right there, but the caution is the spread at 5 o'clock, when there's a big, huge gap, is often between 3, 4 to 7, 8 pips. Okay, so just keep that in mind. The brokers often increase the spread size at the open on the Friday, and so just keep that in mind. If the gap is very tiny, then you may not want to even place a trade. But in this case, the gap was fairly big, and the strategy is, if the price gaps down, it's going to most likely fill the gap. If price opens up here, it's going to close the gap as well by coming down. So that's called gapping up, and it fills the space. So that's a great strategy for anyone that wants to look at it. Some other pairs also did some closed, or I'm sorry, opened up with gap. We're going to look at that in just a couple of minutes, and I believe one of them was the US CAD. I also placed an order on that. And so just a terrific idea for you. This week I see a downtrend continuation. However, uh, sell on pullback, and that's really important. It's pulling back to where I expect, and we're even looking for a slightly bigger pullback, maybe up to this area right here, just above the 215 low. Okay, then you can look for bearish evidence to the downside, which means one black bearish candle, or even trading the breakout below there, just to confirm that it's still going to go down further. How much down further? Let me just take a look. Let's go to the weekly chart, zoom out. Okay, monthly. Okay, there we go. I've got the 2009 low right here at the 0.631 right here. Okay, so you can see price is there right now. Price could still come down quite a bit more. Take a look to the left side. Here's the previous swing low going all the way back to the February 2009. Okay, so we're going to switch back to the daily. There we go. So price, once it goes back up, it most likely will go back down further, and it's got a long way to run. So this could be a good trade for the beginning of the new year. Okay, now we go to New Zealand USD. Very, very similar to the Australian dollar. It just keeps going down. It's also gapped up. Let's go down to the 5-minute chart. Okay, wow, look at that gap, guys. Okay. I didn't see this, but I was looking at some other pairs. But look, the open was right there, and it's gapped up to at least 41 pips, but it's now gone even as high as 68 pips. My goodness, with just a couple of pairs, you guys could have made hundreds and hundreds of dollars trading the right lot size. So uh, it's called the opening gap strategy. You can look at it on Sundays. And there is one company I'm actually checking out right now. I'll give you further information on it in the future. They've come out with an automatic robot, a trading robot that trades these gaps so you don't even have to do anything. It'll do that automatically for you. And apparently it's very successful so far. But I'm going to keep looking at it for at least another month or so, and I'll certainly pass on some more information for you in the near future. But this is an example. Price opened up here. It normally closes the gap and the close of the previous Friday was right there. So you can see it closed all the way up to here and even more. Okay, back to the daily. I see a downtrend continuation, sell on pullbacks only. In this case, I would wait for price to go up a little bit higher, at least to about there, possibly waiting for this a trend for this moving average to come back down lower. That's the 8 moving average, and this is great. Price is well below the 100. Price is below the 50, but we are in an outside range pattern, which means price may come right back up here. This could be a false breakout, so price may come back quite a ways before pulling back down again. Okay, that's what I see happening for the New Zealand USD. Now we get to the US CAD. This is one I actually did place a trade on. And I believe at some point we're going to be pulling back in a big way because, I mean, look at this pair. How many candles has it gone higher? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 11 candles. It just keeps going up to the moon. And I mean, the danger here is that prices really overextended. The experts, the economists, and the bankers in Canada keep saying that the Canadian dollar will still weaken a lot further. And that's what they're expecting. And I kind of believe that as well. I mean, the Canadian dollar could, but it's got to pull back at some point because look at that. Price is way above the 8 EMA. The 8 is the gap between the 8 and the 21 is wide. Between the 21 and the 50 is very wide, and even between the 50 and the 100. SMA. It's wide. So, I mean, this is definitely a pair that is just rocketing toward the planet Forex. I mean, it's got to come back down to Earth at some point, and this might be the start of it coming down. It'll at least come down to this trend line, which I've drawn in. You can see this trend line right here in pink. It may come back down halfway to this candle right here. But again, what you're looking for is, I believe we're still in an uptrend continuation, except buy on pullbacks. In other words, wait for price to come down and then look for bullish evidence to the upside. Okay, and that's what we're talking about there. Last week, I did mention we were still in an uptrend continuation, and the important message was I said you can buy or take a buy trade right away, and that was last week, or wait for bullish evidence. So we opened up right here with this first candle after the red line. Red line indicates the Friday close. This candle is the Sunday, Monday trading, okay? And that was bullish candle. If you would open up right there, the next candle, okay, you would have made, with really no effort, already about 350 pips. Pretty darn good. Okay, so that's the thing there, but expect a pullback. It could be a huge pullback this time. Okay. Next one is the U.S. Swiss franc. Take a look at this. And oh, I'm sorry, I did want to go back to U.S. CAD, right? Let's go to the 5-minute chart because I did want to show you the gap. Now take a look at this space right here. Friday close right there, all the way up to the open, 64 pips. That was a 64 pip gap. When you see something like that, most of the time, not all the time, okay, I can't say all the time, but most of the time, 8, 9 out of 10 times, price is going to fill the gap. So price in this case is going to come all the way down. This is called a gap up trade. Okay, it gapped up. We're looking for price to come back down, and it came down in a fantastic way. So by this time, which is now exactly live, just because I'm doing this live, 9:58, you would have made, let's say, if you would have gotten in after the first 5 minutes or so, right about there, okay, it went down, it went up, so, maybe you're thinking, uh-oh, here we go. See, once price comes back down here and price jumps up, now you're thinking, uh-oh, is price going to go higher again? But you see, the gap still wasn't filled. Even if price was here, the price still had to basically fill the gap. It had to come all the way down to here, right? Or at least to this area, the previous swing high right here. And it hadn't done that. So confident that price would still come down. It went sideways and then did fall like a rock. Okay, so that's the Sunday gap strategy. We're going to have a lot more information of that in the future. Um, and look at that price. This is live. Wow, it's falling like a rock. Do you see that? This is on a 5-minute chart. It just keeps falling. One, two, three huge candles. Last last. Last 15 minutes. Okay, so it's now hitting the previous low, which is right here. Let's go back to the daily chart, and you can see price is going to come back down. And again, the key thing is, don't jump in right away. Wait for price to keep coming down, down, down. Look for it to stall somewhere. Look for bullish evidence to the upside, then get in. If you don't see that bullish evidence, then just keep waiting, because who knows how far down it's going to come. So you've got to be patient, okay? And the U.S. Swiss franc, last week I mentioned that this pair was not easy one to trade. I mean, the open of the trading week, this red line depicted the Friday close. Here's the open for the Sunday, Monday right there. This was a big bullish candle, kind of a bullish pin bar. If you would have gotten in at the next one right there, you would have made some pips. It went down, but you still would be in profit. So just again, take a look at the individual candlesticks. In this case, um, the Sunday Monday was a huge bullish pin bar. Remember what I taught you in school. Okay, MACD is above zero, and the thing is, what you want to do is You can wait for a breakout for price to break out now. Oh, I'm sorry. Last week, what I did mention is buy on the breakout above the 101 or 1013, which was right about here. So if price does close above there, then certainly it's going to go higher, retest a previous swing high right here. Okay. Um, this week I'm saying we're in a triangle consolidation. Okay, so now it's going sideways away again, but just wait for a breakout. Again, you want to look for one good bullish candle and possibly to close above this area of resistance right here before getting in again. I believe price is going to keep going higher, at least to retest a previous swing high and possibly higher again. Okay, now we get to the US Japanese, which is the last pair. Again, this was a gap trade. You can see, let's go to the 5-minute chart. Okay, let me just redo that. Okay, not as big gap as the other pairs. Okay, previous Friday close right here. You can see that. Here's the gap down right there with this big candle. So it'll price open right there. How many pips? Let's take a look. Okay, so we were about 32 pips from last Friday's close. Again, giving us enough room for price to go up higher to fill the gap, and you would have made some really good pips. And in the meantime, it's not only gone up to fill the gap, but it's gone up in total. Look at that, 70 pips. So actually, today was a pretty volatile day when you really think about it. Most of the pairs gapped up because, I mean, price had been going down in one big direction. Friday, a lot of the pairs moved quite a bit in one direction. So now we're just pulling back, and there's a lot of profit taking going on, and so we just got to be ready for the next move. And in this case, the next move is downtrend continuation. However, sell on a rally. So that means waiting for price to come up higher. And in this case, at least to about there. Okay. Or price may come down to meet with the 8 EMA line, which is coming down. So again, just wait, have patience, don't be in too much of a rush, and you're going to get into some good trading opportunities. Okay, so um, as I mentioned at the beginning of the video, I've got a picture of my dad. That's what I want to post right now, if it's all right with you. Okay, this is my dad. His name is Michael, and I mean, he was just an absolute fantastic guy. I mean, I really do miss him, will miss him, and as I mentioned, we just laid him to rest yesterday, so it was a very emotional and stressful day for our entire family. Um, and I can't really say enough about him. One great thing is if you would have ever have met him, he would have told you his stories from back in Europe, and I mean, he had so many stories that people were just captivated by what he had to say, and um, that's my dad. I dedicate this video to the memory of my father and all those people you love, and that's really important. I want you to understand that too. So for everyone that you love, and for those people who have passed away recently, I also dedicate this video to all of those people, including my dad. So the next thing is use this year, 2016, to mend any broken fences. And you know what that means. I hope you do. If you love somebody, if you love people and friends, neighbors, or your family members, your own spouse, wife, kids, and there have been some problems in the past, well, it's time to mend those problems this year, and at least you can try, and that's really important. So again, sincere thanks to all of you guys. Thanks for watching this video right to the end, and we will talk to you soon. If you have any emails, just send them to me. I'll be more than happy to answer them. Take care, guys. Bye bye.